Hello, everyone. My name is William Mucker. I am a client executive with Camaplan, and I would like to thank you all for joining us for today's webinar, Unlocking Hidden Treasures. Supercharge your self-directed IRA with mineral rights investments with Troy Eckard of Eckard Enterprises. As a quick note, please be aware that Troy will be answering questions at the end of the presentation. However, feel free to use the chat and/or Q&A function on your screen to pose your questions whenever they cross your mind. They will be saved and addressed once the presentation portion ends and the Q&A portion begins. Before we get started, we do have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any products. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information. If you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass the controls over to you, Troy.
Thank you so much. I'll just do the share screen right now, if that's okay.
Absolutely.
Let's see if this old codger can figure all this out. How's that sound? Are we clear? Everything on the screen good to go?
Looks good on my end.
Okay. Well, first off, Will, thank you so much for having me on the show and the ability to educate your clients, potentially new individuals that are starting to learn about and consider using self-directed IRAs for making investments. I'm going to start off with a little bit of a story first, and then I'll get into Minerals 101. I set up my first self-directed IRA, I believe, in 1992, when I was still just 27, 28 years old, long before self-directed IRAs became really a modern thing where people really realized the value of self-directed IRAs. And here I am, almost 60 years old, been in the business for going on 40 years, and I'm watching investors who have educated themselves, been informed the incredible value of using their retirement funds through a self-directed IRA to create wealth. I'm talking not a little bit of wealth, but enormous wealth. And one of the things I will say before we get into the mineral rights is that if you don't have a self-directed IRA, get one. If you're not using in a proactive manner the investment of those funds inside your self-directed IRA, start doing it today. I have investors and partners. We have almost 1,300 high net worth partners as clients and investors with our firm. And I cannot tell you how many of those individuals have several $1 million in their self-directed IRA because they spent the last 10, 20, 30 years investing inside of that self-directed IRA, letting the government be patient and wait for their tax dollars as you grow your wealth, and then using the tools that are provided under the IRS tax code to extract those funds, to roll them from a self-directed IRA, from a traditional to a Roth. There's just so many tools. And for me, I didn't get a chance to do that. I was like the cobbler's kid. I had no shoes. I was so busy managing high net worth investors' portfolios, I didn't focus on my own self-directed IRA. So I look at where I'm at today going, gosh, I wish Camaplan and Will and everybody that now provides all this educational information, I wish they would have been available 10, 20, 30 years ago, but we didn't have Zoom meetings. We didn't have the internet. We didn't have all these tools. So you had to really rely on your CPA or just word of mouth to find out about these kind of great, valuable tools. So I just want to start off by saying that because, quite frankly, those of you that are attending live, thank you for doing that. Those of you who will see this recording later, just know this may be one of the best tools you'll have in your arsenal to create wealth, prolong taxes that you have to pay on the growth, and do it in a very, very logical and very sophisticated way. Let me introduce myself. I'm Troy W. Eckard. I'm the CEO of a family energy office here in Allen, Texas, which is the northern suburbs of Dallas-Fort Worth. I have a family-run business that's under the umbrella of Eckard Enterprises. I've been involved in oil and gas since 1985. I started off as a young investment broker specializing in oil and gas, working with high net worth investors at that time that were mainly looking to take positions in participation in drilling oil and gas wells because the tax deductions were so good. Well, in a self-directed IRA, you don't need tax deductions. You want to make income. You don't want to lose money. You want to compound that growth over time. So I really didn't deal much with self-directed IRA or retirement money in the early part of my career because there was no need for it. They were looking for active deductions outside of their retirement plan. But as my career evolved and as the industry itself, the oil and gas industry evolved, a new asset class, and I say new, it's been around forever, but a new asset class, which is the personal direct ownership of oil and gas mineral rights, has really come to its own in the last 5 to 10 years. And there's a lot of reasons for that. So what I would like to do in maybe 10 or 15 slides is just tell you what mineral rights are, tell you why I believe the value is so tremendous. I believe it's the #1 passive income asset you can own in your portfolio, and why it's now really available to high net worth investors, both through regular investment accounts and through your self-directed IRA, where it wasn't available, at least without a tremendous amount of risk 10, 15 years ago. It is truly an evolving market that those that pay attention can take part in. So let's get started. So mineral rights, what the heck are they? Well, first off, I will tell you, I've been doing this for almost 40 years. It is the only and single most truly passive investment, passive income generator with 100% zero liability. Okay, let's go forward and find out how that works. And hopefully my Zoom doesn't freeze on me. I think it will. There we go. All right, first off, I hate the word expert because many people use it freely without having really any basis for using it. We have guys and gals out there promoting themselves as masterminds and experts in multifamily, different categories. My 800 number for my company has been around since 1991. My 800 number is older than most of the age of the sponsors and the principal of these sponsors, these different investments that are out there selling you with so-called expertise and all these other asset classes. It's not about bashing them. It's simply saying one of the risk components you have to make in making any investment, whether it be oil and gas or other real estate or cryptocurrency or anything else, is you got to rely on the expertise. And that expertise comes with lots of investment cycles, lots of economic cycles, and really the accumulation of information, experiences, and data over a long period of time that says, I truly feel like I'm an expert in this sector. Well, I spent a lifetime, a career, almost 40 years doing nothing but oil and gas and focus on this. So there are other oil and gas companies out there, but maybe they don't have the expertise, maybe they don't have the right asset, maybe they don't have the right model, maybe they don't have the right intention. So being a guest on this show today, or on this presentation today, is a reflection of what I hope to be Camaplan's ability to say we want the very best of the best in presenting on different asset classes, and I'm really appreciative for this opportunity. So I've given you 37 years of experience, but behind me, behind this wall, is a team of about 44 current staff members of engineers, geologists, accountants, landmen, bookkeepers, wealth managers. We built an enormous family office based on strictly one asset class, and that's energy for you. Okay. First off, what are mineral rights? Mineral rights are a legal claim, a deeded title claim to what is below the surface. The United States is the only country I know of in the world that allows private individual investors to own the mineral rights below the ground. Every other country, it's retained by the country, the state, or the government. Okay? So one, we're the most unique country on the planet for that purpose. Number two, because of the way the real estate laws were set up, you get 3 rights when you buy a piece of real estate. You don't know this, but you get it all inclusive in one pack. You kind of got a freebie when you bought that surface right. The surface rights is everything attached to the surface above ground. The air rights is everything above your parcel of land, not attached to the surface. And then mineral rights are everything below the surface, absent mining, and of course, absent water. So everything else would be precious metals, oil and gas, etc. So because of that, depending on where you're at in the United States, you may or may not see that there's any value in what's below the surface because maybe you don't have gold, silver, precious metals. Maybe you don't have any oil and gas there. So it's really nice to own it, but it has no value. Others that have been fortunate to buy surface rights from 150, 200 years ago to present are lucky enough to be under 9 oil and gas basins, big, huge buried Grand Canyons that are contained with all the oil and gas the United States will want to produce going forward. And if you happen to be a mineral rights owner in that area, you now have the good fortune of owning 100% of the oil and gas underneath your parcel of land. You just don't have the money to go drill that well. You don't have the money to extract it. So you've got an asset, but you don't have the money to bring it to life. I'm going to walk through the slides and tell you how that works. Now, there are millions and millions of acres. I bet there's close to 200 million acres of oil and gas mineral rights in the United States. And it doesn't have to do with these 9 basins. There's other areas where maybe it's not a huge buried Grand Canyon, maybe it's a buried river, maybe it's another geological formation. But at the end of the day, We focus as an industry today, and Eckard focuses as an industry today, on what we believe to be the most logical place to look for, acquire, and manage mineral rights. Because why? It's like looking at the United States by satellite at night. You want to know where the density of the United States is. Pull up on your Google the US at night, and you'll see just little clusters of lights. New York City, Atlanta, Dallas, Houston, LA, Seattle. So out of the entire country, you'll see very clear pockets of where the population density exists, and you'll see a scattering of lights all over the US, and that's really what it looks like underneath the ground. We have central concentration areas where the dinosaurs accumulated, the dead plants accumulated over time, and that's where the highest concentration of oil and gas exists in this country. The geologists, the geophysicists, and 100+ years of drilling have clearly defined where it's at, and because of technology, now we are able to access oil and gas reserves we never could have accessed before, which is why in the last 12 years, the United States has become the #1 oil producer in the world, and we literally have tripled our production here in the US as a result of technology. The oil and gas industry uses the same software and hardware as they send spacecraft to Mars. Everything that goes on with Tesla, everything that goes on with AI, all that technology is being employed and utilized by the oil and gas industry. I believe up until about 3 years ago, the oil and gas industry as a service provider was the #1 service providing industry that utilized the most software and the most hardware of any other industry. So we've always been about technology, but now that technology has unleashed and unlocked the secret to producing all the oil and gas from these hidden 9 basins that we didn't know about even 10, 12 years ago. So this is an emerging market. It's a fantastic opportunity, and it is something that you surely should want to put inside your IRA for the following reasons. Let's go. Now, if you looked at this map in the United States 10 years ago, 15 years ago, everything you see in light pink and dark pink didn't exist. Maybe 1/10 of it existed. We as an industry, through geology and geophysics, we knew where oil and gas was buried, but it was in a rock formation that looked like wet concrete. It was called a shale, S-H-A-L-E. And as a result of shale being like wet concrete, you could drill a well into it, but you didn't have enough pore spaces, and the pore spaces didn't connect. They were like this, right? They didn't connect. So we could drill it, it wouldn't flow. Well, the industry utilized technology and they utilized innovation, and what they came up with is, what if we drill that vertical well the size of a paper plate? What if we drill down and go sideways 1,000, 2,000, 4,000 feet, a mile, a half a mile? Now that horizontal well has exposed itself to this hard, wet concrete type formation that now allows us to maybe take what one vertical well could produce. Now it's 200 times as much. That's still good, but wet concrete, you can't get a glass of water. It's wet, you make it flow a little bit, but you're not going to get a glass of water. How do I get it to aggregate or accumulate? Well, let's go down to that horizontal well. Let's use sand and water, and let's crack it like a jackhammer. And let's go along the path of that horizontal well bore, and let's crack the rock by using water and sand. It allows the molecules to be exposed. The pressure of the Earth's weight pushes down. It's like stepping on a sponge. Now we've given it a pathway to escape. We've opened up natural cracks in the reservoir, which allows it to expose more of the reservoir. And then we let Mother Nature do the rest of it. It presses down, forces the oil and gas molecules to the surface, like scuba diving. When it comes from 7, 8, 10,000 feet below the surface, it starts out this big. By the time it gets to the surface, it's bigger than my room. That is just how oil and gas is extracted. Now, I point this out because I want to tell you why mineral rights are so important. So everything you see in pink that was not really in pink 10, 12, 15 years ago are owned by mineral owners. Now, see, in the United States, other than on federal land or state land, every time Exxon or any major oil company drills a well, they must first go knock on the door of a mineral owner and say, Mr. Eckard, you own 640 acres in the state of Oklahoma. We, our geologists, our team, our production engineers believe you're right in the middle of the Anadarko Basin. My mouse is down here over what they call the Woodford, right? You're in this area that's this huge buried Grand Canyon. We want to drill wells under your property, so we want to negotiate a lease with you. And I'm going to be the guy who doesn't know what's going on saying, you want to lease my minerals? Well, is it going to affect my surface? No, sir. You have no liability, no exposure, no drilling costs, no capital costs, zero. We'll lease your minerals for $1,000 an acre. We then have 3 years to drill a well. And if we drill a well, because we've committed and performed, we have all future development rights to extract and produce all oil and gas from all zones below your property, but we don't affect your air rights, and we don't affect your surface. Keep your ranch, keep your farm, keep your property. We're simply leasing, not the owner, the mineral rights and the ability to harvest or develop that for you. But what do I get for doing that? Well, we're going to pay you a fee up front to lease it, but when the first production starts, you're going to get a royalty payment as the mineral. You will get a percentage of all gross revenue from every zone, every well, every molecule of gas, every drop of oil for as long as this produces forever for free. What's that percentage going to be? Well, it depends. If I'm in an area that's not very active, I'm not going to get a very high royalty. I'm going to get 12.5%. But if I'm right in the middle where the core of the play is, and everybody wants to lease my minerals, it's supply and demand, I might get as high as 25%. So somewhere between 12.5 to 25% ends up being the royalty payment I get. So I go a year, I lease the land, I go for a year, and all of a sudden they drill a nice horizontal well. It comes in 500 barrels a day, and they sell $1 million worth of oil that month. 60 days later, they get a check from the oil buyer, Valero or one of the refineries. Here's a check for $1 million. The first thing the oil company says is, well, we don't own 20% because it belongs to the mineral. So we take 20% of the gross check, we put in our royalty distribution account. We only have 80% of the revenue to pay all the bills, all the liability, all the drilling, all the exposure, all the environmental. That 80% covers all the risk. This mineral owner, he gets 20% for free forever, and he gets paid every single month for as long as the wells last. What makes mineral rights so powerful is that the United States consumes 20.5 million barrels a day. We only produce 12.5 million barrels a day. 40% of what we need to run this country, we have to buy from foreign sources. So we have a huge supply-demand differential. We have an enormous success story based on the technology of what's been able to be done, fracking, horizontal drilling. And now we have millions, I'm talking 200-300 million acres in these pink highlighted areas of mineral owners who don't know oil and gas. They don't understand how it works. They own it. They need cash to run their farms and ranch. They need to put their mom in a nursing home. These mineral right owners have now figured out, I have an asset I never knew I owned before, and now I can add it to my investment portfolio, and I can sell a percentage or part of my minerals to create liquidity and cash to manage my business. There is the arbitrage. There is the opportunity. Something that was never considered a viable liquid asset now became liquid and marketable. And buyers like Eckard and buyers like mineral buyers like myself, institutions and private equity, realize this is $1 trillion plus opportunity, not enough money, not enough sophisticated buyers. They don't know what they're doing. So it's those individuals and companies who not only understand the exploration and the drilling and what goes on in the entire oil and gas industry, but how do you navigate 200 to 300 million acres worth of opportunity and say, how do I narrow it down to where is the honey? Where is the prime rib out of all this pink area? Well, that's where Eckard's expertise for 37 years comes into play. So mineral rights are, you own them, you're deeded and entitled, it's real estate, real property. It is something that major billion-dollar oil companies must contract to lease, and they must give you a royalty payment, and you get that income for free as totally 100% passive income where they can touch a single well. So I don't care about federal land. I don't care about state land. We don't buy minerals under those because you can't, because it belongs to government. So what we buy are only private land, and we don't care what the Biden administration does. It does not affect us. Okay, now look, here's what it looks like underground. I watched a great documentary last night on the Grand Canyon. I just happened to stumble across it last night, and it is probably the best geological lesson you could get as a potential mineral rights owner. You watch the Grand Canyon, how it evolved, and the oceans and the seas and what happened. And so I am showing you a buried Grand Canyon. This is the Grand Canyon today. And each yellow arrow shows you a different time in which things were deposited. So the bottom right yellow arrow might have been 250 million years ago. The middle arrow was 175 million years ago. And that big white chalky section with the upper arrow was 80 million years ago. But in those different deposits were made up of carbon material, dead plants and animals, sea activity, sea urchins, right? All that over time gets compressed like a boiling pot of rice, and it cooks, turns into oil and gas. But now you look at the rock and you go out to the Grand Canyon, you look at that rock and go, there's no way water's in here. Well, the truth is those molecules are so tight, so compressed, they've cooked over time, completely covered over this Grand Canyon, and another 4,000 feet above this Grand Canyon is where these oil and gas shale basins exist today. They're buried 3,000-4,000 feet underground. They cooked over time. Now they're just enormous deposits of oil and gas. And now we've had to use horizontal drilling and fracking to free it up. But guess what? Could you stand on the edge of the Grand Canyon and throw a rock and hit the Grand Canyon? If you threw it the right direction, the answer is yes. So geological risk is down to like less than 1%. 1% chance or less of a dry hole. Why? Because it's not whether you hit oil and gas, it's what your percentage rate of return. So now we're not betting on a horse race. We're trying to find the best jockey race, the best oil company to follow. That helps us find out which mineral rights are the best ones to buy. Because I know I'm going to hit oil and gas. Which company drilling at which depth is going to give me the highest rate of return? That's what it really boils down to. So this is what it looks like underground. The upper left-hand corner is a schematic. It shows you it's underground plumbing. So you're used to buildings and 2-story, 5-story office buildings and apartments. We see it underground. We'll see that the oil company will come in and put in a 2 or 3 acre gravel pad site. They'll go in and decide, we want to drill in zone number 5 at 8,000 feet. We're going to drill 4 horizontal wells side by side. And they'll go drill. You can't even see it from the surface. Okay. And they have 3, 4, 5, 10 reservoirs they can drill over the next 20 or 30 years. So this is about cash flow, but it's also about growth. How do I get growth? Every new well that's drilled to a mineral owner gives me 2 things. It gives me cash flow, but it also increases my value because now I have proven producing reserves, 500,000 barrels to 2 million barrels of oil proven per well drilled. And that oil company just drilled 4, 5, 8 wells on my property. Now I get my cash flow from the wells that are producing every day, paid out month to month. But now I also have 8 wells at 500,000 barrels. I now have 4 million barrels of oil proven in those wells. I can add to my balance sheet saying I'm getting great cash flow, but I know I'm going to get cash until that oil company extracts 4 million barrels of oil from the estimated recoverable oil in those wells. But by the way, that's only zone 1. By the way, that's only 4 wells. That zone can hold 8 wells. So what we get is a free ride from the very beginning for all revenue, future development free, no cost, no capital cost, no expenses, no liability, no environmental. We just get money. The single greatest 100% passive income generator you'll ever find in any investment class. This is what it looks like horizontally, okay? The key to maximum value is activation. If I don't own the minerals and somebody doesn't drill it, I have 0 value, okay? So I need to know I'm buying minerals where they're going to drill. There's a lot of land that will be drilled in 100 years from now in these basins. There's a lot of oil and gas being drilled today, which is creating enormous millions of dollars a month in revenue. And if I happen to buy my minerals under those sections, I'm making 12, 15, 20, 30% cash on cash return per year. Our portfolio has been around for 4 years. We can show you that at another time. So it's all about generating cash flow, improving up reserves, and it's about having a mixed portfolio. A rancher can own 640 acres, maybe decides to sell you only 50 acres because that's all the cash he needs. Well, I can either buy a specific 50 acres or I can buy 50 acres across the 640 in a fractional ownership, 50 divided by 640. Our company has the expertise to know what to buy, when to buy, and how to buy it. And we have an entire team back here that verifies it, files the deed of record, deals with the oil companies. Guess what you get to do? Go have fun at the beach, go run your business, go see your grandkids, because why? Eckard provides all the service, and there's really not a lot we can do except get a gross check and send it to you because the oil company does all the work. But you still have to sell somebody watching your money, which is why Eckard has been doing this for almost 37 years, all right? So what are minerals? They're real property, they're titled and deeded. You own 100% of all the oil and gas under the minerals that we own. So all of it, from 2 feet below the surface to the core of the earth. If they find any oil and gas, it's ours, our share. You're a landlord for billion-dollar exploration, because our companies are Exxon, Chevron, Devon, Oxy, Diamondback. Name a major billion-dollar oil company. Those are only the companies we buy minerals under. Why? We want to know that our minerals are being developed by the very best technology available, by the very best people available, and they need $10 million per well to drill. I need billion-dollar oil companies that have plenty of cash flow and assets and borrowing capacity to develop my minerals. I don't want to buy minerals under a company that can drill 1 well a year. That's not the game plan. The game plan is get the best of the best, fully capitalized, that they spend 90% of their own money drilling that well, and they want to make the best well possible so they get their money back. I want the best jockey in the race, right? What else is minerals? Well, there's 0 liabilities, 0 exploration costs, 0 operating expenses, 0 property taxes, 0 future capital costs, 0 environmental. There's no risk. I get a check every month. I've owned minerals for over 30 years. Never have I had a payment, a cash call, or written a check, ever. Now, how important is that in a self-directed IRA? It's super important, because why? An IRA, self-directed IRA, is about accumulating wealth and avoiding paying the taxes until the time you extract. I don't want any loss in that IRA. I want it to just do this over time and grow, keeping those tax dollars at work. Well, this is that asset that does that. I don't have to worry about apartments and cash calls and tenant improvements and et cetera. This is a 0 drainage on your self-directed IRA as a result of it being 100% net cash flow with no capital exposure. All right. Mineral rights are the most passive form of income that I know of. I challenge anybody else to tell me where you get this passive income, cash flow to pay it out every single month for the next 25 to 75 years, because that's how long these wells last. I distribute royalty income monthly. Eckard sends out our checks either on the 10th, the 20th, or the 25th. Why 3 checks? Our main distribution on the 25th, because we get the checks in around the 25th the previous month through the 10th. We put it all together, run it in our accounting system, send out 2,000 checks a month and growing. Okay. We also know that on the 10th, we want to run first distributions for our big new portfolios. And the 20th is all of our drilling partners who get their revenue from participating in drilling to get tax write-offs, which you don't want to do in your self-directed IRA. So we are absolutely committed to never missing or violating those dates. We have not missed a single date in 48 months since we started this mineral project back in 2019. All right. Mineral rights are real property. It's your property. It's yours. You buy or invest through a purchase sale agreement. It goes to your self-directed IRA. You own its title. We manage it for you. We do all the dirty work. If at any point in time you don't like our voice, you don't like Eckard as a company, we'll assign it out to you. Your checks will come straight from the oil company to your IRA. You never have to hear my name again. However, 99.99990% at this point have ever asked for it to be assigned out, because why? We're experts at what we do. We focus and maximize on your experience with us as a client, as a customer. But more importantly, mineral rights allow us to be able to give you nothing but good news, which is checks. We don't have to send you bills. So that's a very fun business to be in. It's easy to transfer in your estate. A lot of our partners will take mineral rights because there is no financial risk. There's no financial capital, and assign them out to their kids and their grandkids. They gift it, because why? All they have to do is not sell it and just receive revenue every single month and not go buy crack cocaine with it. And they'll have revenue checks for the next 25 to 75 years. It's the easiest, most productive cash flowing asset you can give to your heirs. All right. It is 100% cash flow. I repeated that 10 times. I'm going to say more. Cash flow every single month. Once it starts, of course, it's going to go up and down. Price of oil's up, price of oil's down, price of gas up, price of gas down. Wells come online, those wells decline, new wells come online. So what we see is constant cash flow. It vacillates over 12 months, but guess what? We look at things on annual basis. Our annual rate of return across all portfolios is running well over 16% cash on cash. That is because we are diversified and experts at what we do, and because we believe in diversification through premium selection process of minerals and those operators, which are the best jockeys in waste. Tax advantages, there is none. The IRS has declared it's real estate. You own a house, you own a lot. The house burns down, you get a tax write-off or a loss based on losing the house. The insurance company pays you to replace the house. They don't replace the lot. The IRS sees mineral rights the same way. You're not going to lose money. It's always got a value. Whether it be a lower value than you paid or not, that's a different story. But you do get 15% of the income, the 1099 income. In the case of self-directed IRAs, you won't get this tax advantage because it's in your self-directed IRA. But if you invest in a regular account, 15% of the income is not taxed. That's a great leverage point. Gives you a higher rate of return because it's after-tax advantage consideration. So it does give you a higher lift. I'm just pointing this out, even though it doesn't qualify in self-directed IRAs, because a lot of our partners will invest so much in self-directed IRAs, they'll also invest in a regular investment account. Okay. Ways to invest in minerals. Regular investment account. Sell some stock, buy some minerals. Find an LLC, family trust fund, etc. Regular investment account. You can use a self-directed IRA. Incredible. I would imagine 70% of our $600 million portfolio has come from self-directed IRAs. Folks, you have the chance to really utilize a self-directed IRA. If you don't have one, get hold of Cam Plan and set one up today. The 1031 tax exchange is a great tool for those who are selling real estate, saying, I'm going to sell this property, but I don't know where to go. What other asset class matches the 1031 and what gives me the same kind of valuable cash flow and lift in value? It's mineral rights. 99.9% of most investors do not know a like-kind exchange can be from traditional real estates into minerals. And then when you sell minerals, if you sell them, you go right back into traditional real estate. So these are the 3 ways you can invest. What we all seek. What do we seek as investors? I'll be 60 years old this year. I even hate that number, by the way. But what I see at almost 60 years old is this. I want less complication. I want less interference from people trying to manipulate me and sell me. I want to invest in something that can provide me cash flow, and I don't want bad news. I don't want to know I owe a check or my roof blew off or the tenants moved out. I don't want to hear all that nonsense. I don't want a sponsor that's got me in this joint venture LLC and they're saying we didn't manage it right. We misguessed on our model. By the way, here's an invoice. You owe me money so we can pay off the bank, which is coming like a firestorm. I want to know. I can go sit on that beach with my wife, and all I want is passive income without effort. I want to know, how was my revenue this month? How was my revenue last month? What does it look like next month? How did I do this year? I got 25 to 75 more years of this, and I want to take my revenue and buy more minerals because why? I just want my pot of cash flow, my pot of assets to grow and grow and grow. This is truly one of those asset classes you can continue to buy every single month, every single time of the year, because why? It just adds more value, more cash flow, and reduces your exposure to capital liability. How do you want to get involved? If you want to get involved in minerals, you're going to go to www.eckardenterprises.com. You're going to sign up on our site called Eckard Insights on side of our website. It's an app that we put together. You sign up, tell us you're accredited. You get access to all the data and information. And when you become a partner, it is the only proprietary app like it is for alternative assets, alternative investments, commodities. We built it over the last 3 years. It tells you every detail of every well, every mineral track, every deed, every revenue. It is a state-of-the-art app that we had built because why? I don't trust anybody. I want to see my data every day. I want to get bored at the airport and see what my wells are doing. I want to know what I've sunk my money in. It was created for you. You can call us at the 800 number. Ask for a wealth manager. We'll get you the best. We have 5 salaried employees. They do not make commission. They don't get paid based on sales. They're here to help you manage your wealth by introducing minerals. And if it makes sense, helping you build a portfolio. If it doesn't make sense, we'll still educate you and wish you best. But we do not sell here. What we do is we manage wealth. Let me tell you, I'm probably the only CEO out there. Text me, call me on my cell phone. I get probably 100 texts and emails a day. And I bet I answer almost every single one of them every day. Why? I started my company humbly at the very bottom. Started it from scratch, my wife and I. We used to live in a travel trailer in college. Everything we have today, we built by ourselves. I firmly believe you should never be too big to talk to every single partner. I firmly believe that every question should be answered if it's relevant. I believe every person has the opportunity to talk to the person that's got this game plan in mind. So I am a CEO of a beautiful family energy business. I'm very proud of what we've done, and I'm super honored to be on this particular conversation today. And I welcome you to ask questions. I believe that's the end of my presentation. So it's all back to you, Will.
Great. Thank you so much for the information, Troy. A lot of information there. As Troy said, perfect time for you to start using the chat and Q&A function. It's open to all for any questions about Troy and what he's discussed so far. To get started, if somebody's new to oil and gas or mineral rights investing, what are they looking about, the minimum to get started? Do you have any minimums, or how does that work?
That's a great question. So each portfolio ranges between $5 million and $15 million on average. You can start off with an investment as little as $25,000. So think of it this way. You're not trying to pick the winning lottery ticket. If you had a $5 million portfolio, you said, look, I want to put in $100,000. It'll be 100,000 divided by the 5 million. That's your percentage of every mineral track and every well inside the portfolio. So you're getting a piece of all the action. We started $25,000 because we believe, one, if you've never invested in oil and gas, you kind of want to put your toe in the water. Some people have bigger toes. Some people start with $500,000 and they do 4 or 5. Some start with 25,000. But if you said, hey, I want to get started, I want to do 25,000, but let me do 5 or 6 or 10 portfolios. What that gives you the ability to tiptoe into the process, see how we manage the company, but more importantly, it gives you maximum exposure across multiple portfolios. So 25,000 is our minimum. Sometimes we'll have a larger portfolio, and because the way the computer works, we have to have a higher minimum. So we just closed a $150 million portfolio called the Cornerstone. It was a $250,000 minimum, but every single day of the week we have smaller portfolios at 25,000.
Thank you. And you may have talked about this, but just to summarize, what's the duration of these investments? Is it until eventually it gets? Do they get tapped out, or how does that work?
Nobody on this call will be old enough to see these minerals play out full value. So the good thing is that if you just held these minerals for the next 100 years, you're going to have so many wells producing, so many new wells drilled. I would imagine there's not a single mineral acre we own that's not going to last 75 to 150 years. So the reality is it's a choice you'll make, that maybe you want to reposition some minerals or sell some to go buy another asset, or maybe it's just part of your estate. The reality of it is it'll be a choice when you want to exit, if you want to exit some part or all of your portfolio. And the way that would generally work is we'd be notified, hey, I put $1 million in 10 portfolios at 100,000. I'd like to sell 1 or 2 portfolios. We have created on our app a peer-to-peer market, which means you list and drag by just a push of a button all the data on the minerals you want to sell. Now you have 1,200 and growing other high net worth sophisticated investors that could actually buy your minerals. They buy them at the price you said. Hey, I paid 100,000. I think I've got 9 new wells. I want to ask 175,000 for it. You're going to have 1,200 sophisticated high net worth investors buy it. If that doesn't occur, then we can go to another site, which is our second part of our market. We're building it peer, meaning partners of Eckard, to outside third-party accredited investors. And what we have found is that minerals are one of the most sought after oil and gas assets there is. 99% of people don't know what they're doing. So exiting is just a matter of you telling us what you want. We'll offer to our internal group, then I'll be off to an external group. You can buy and sell portfolio at a time.
Great. Thank you for answering that. Again, any questions? I know you might be getting your typing hands warmed up, but feel free ask any questions for Troy, or even if you have self-directed questions, I'm happy to answer those as well. Troy seems like somewhat of an expert on that fact too, being worked with them for so long.
Well, one thing I want to touch on, I know a lot of them may not ask the question, and this is probably going to be passed on to the other. We are absolutely zero concerned about green energy or GSC or all the other anti-fossil fuel movements, because at the end of the day, with $5 trillion invested in alternative energy sources, the whole world has found out in the last 24 months that oil and gas is not only here to stay, but it will dominate 75 to 85% of the future energy market as a result of what? Everything in this office is made from fossil fuels. My shirt, my clothes, my watch, this screen I'm staring at, it's all made from fossil fuels. So the idea should be a move away from fossil fuels to help assist fossil fuel from being the only reliant energy. And the fact of the matter is we need wind, solar, and other, as long as it's economically viable and makes sense. But if you look at the data, it clearly says oil and gas is not only going to be the continued #1 energy resource. In fact, the demand for oil and gas in the last 4 months is at new records. We choose to be in states that are friendly, because the one battle we don't want to be in is battling regulatory environments like Pennsylvania, Colorado, New York. So we can be in private mineral ownership, but if I have to choose the 9 bases, I'm going to choose the bases that are not only most friendly to fossil fuel, has the most private property that we can buy minerals in, but the state regulations within that state are conducive to maximizing my ownership as a mineral owner, right? So I just want to point that out, because I know at the end of the day, there's so much public negativity about oil and gas, it's all a smokescreen. When you look at Warren Buffett, the smartest, richest stock trader on the planet Earth probably ever, has just spent almost $50 billion buying interest in Oxy and Chevron. Not one word about Warren buying fossil fuel, right? What it tells you is that guy only owns 57 stocks of 4,200 public traded stocks. And what he buys, he believes is here for the next 100 years. And he has bought $50 billion of Oxy and Chevron, because he's saying to the whole world what? It's nice that we're creating alternative energy. They'll have their role, but it's going to be about this big. And fossil fuels will be this big. So Warren Buffett has said, out of Berkshire Hathaway, I'm putting $50 billion, and he continues to accumulate. That should be the litmus test of credibility of the fossil fuels future. It should be credibility about the smartest investor on the planet, saying I condone it, I invest in it, I'm building assets in it. And that should tell us, as self-directed IRA owners or somebody considering a self-directed IRA, I'm following that guy. I don't need to be the smartest guy in the room. I need to do what the smartest guy in the room does, because that makes me smart.
A lot of great information. Looks like you touched on the question about investing in Pennsylvania, so that's great.
Well, so I threw that in while I was talking.
Perfect. Any other considerations for people that are brand new to oil and gas?
Yeah, I would tell you this. This is really important. Oil and gas is one of the dirtiest industries there is. I'm talking from a sponsor perspective. If you sent me 50 packages from different sponsors trying to sell you oil and gas drilling or minerals, I'm going to tell you 95% are crooks, liars, cheats, and thieves. It's a tough business. I've been doing this a long time. And why is it a tough business? Because you don't know what you're doing. And they'll call you or contact you. They'll come on with this nice country twang. Yeah, we're drilling with Exxon. This is what we're going to do. And you get lulled to sleep with this fireside chat. I was born intense. I was born talking 90 miles an hour. I am one of those guys that's all in or all out. I've been doing this strictly for 40 years. That's my entire career. And I'm just warning you, don't be lulled to sleep. Don't say, well, Eckard's got this. These other guys look like that, so they're like that. I can give you thousands and thousands of stories where it looked like it smelled like a skunk, and it was, but you ignored the odor. Be careful. Whether you ever invest with me or not, just be careful. The second thing I would tell you is that 90% of the publicity out there is incorrect when it comes to oil and gas. The IEA, the International Energy Agency, puts out reports every single week. They're wrong 98% of the time. Why? It's international. They specifically don't want the U.S. to grow with oil and gas reserves, because why? They want us dependent on all these foreign countries who hate our guts. Every week they come out and says the IEA says the oil industry has got 5 million barrels of extra supply in the U.S. A week later, they come back and say, we were wrong last week. We really sucked up another 7 million barrels. The idea here is they do not want, they being everybody outside the U.S. and those who are not behind fossil fuels, they want you to not invest in fossil fuel because the more you invest, the lower the price comes. The more capital we give Exxon, they drill more wells, which lowers the price. The lower the price, the stronger our economy. The higher the price, the weaker our economy. And today I got news, good news for some, horrible news for most. We are only making 12.5 million barrels a day. We've laid down 110 rigs in the last 90 days. You're about to see oil prices skyrocket starting in the first quarter of 2024, and we're talking $100+ a barrel to as high as $150 a barrel, and natural gas is going to follow right behind it. Why? We are behind drilling. There's no capital. There's no lending. The Biden administration run everybody away from providing capital to the oil industry, but yet we have record demand starting in March, the highest the globe has ever seen in the past. And so you have this disparity between supply and demand. So all I'm leaving you with is a thought, whether you buy directly in oil and gas through your IRA, self-directed IRA, or individually, whether you can buy oil and gas stocks. 100% my confidence as a guy who's been doing this for 4 decades, you're going to see oil prices skyrocket, and it could last 2 to 4 years. What that's going to do is crush the economy. It's going to create hyperinflation. It's going to create rising costs across everything. That package for those donuts, that package for your kids' food. I don't even care if you buy discount cereal. That box, that bag comes from fossil fuels. Everything's going to go up. We're not even close to being done with inflation by a long shot. That's my economic scenario. Will, I'll turn it back to you.
Thank you. David asked what minerals are up and coming. I'm not sure if I completely grasp that question myself. So maybe
what minerals, where, what basin's hot, and that there's not an answer to that. So here's the answer. We have institutions that are backed by private equity who are buying in the wrong spot. We have large aggregators, high net worth family offices, don't have a clue what to do. How do I know that? They bought stuff in 2015 and 16. They're now coming out saying, here's what we spent $100 million on. Troy, you guys are buyers. You're the only cash buyer out. We pay cash for everything, no debt. So what do you think? We look at their portfolio and go, you got about 5 million out of your 100 million that we would buy. So there's no such thing as up and coming. It's about where you can find the very best rock. It's about finding the best rock that has the highest concentration of oil and gas reserves, combined with the very best oil companies who will drill it right, frack it right, maximize extraction, and they'll do it in a short period of time. Yeah, it's really important. We don't drill for zinc or anything else, David. It's all pure oil and gas. It's oil and gas, natural gas liquids. We don't mess with zinc or lithium. That's mining. So we don't do that. We're strictly oil and gas exploration when it comes to minerals.
Great. Thank you for the question, David. And thank you for the answer. Troy, you were talking about incorporating new technologies like AI and other aspects that, you know, other companies like Tesla use earlier on. Is there anything new that you're excited about that you can talk about?
Yeah, I think so. I think AI is going to actually, what I love as a mineral owner today, we have a certain expectation of a percentage of extracted oil and gas per well drilled. Right now in Oklahoma, it's running about 8%. So in a square mile in Oklahoma, it ranges from 50 million barrels of oil in place per square mile. And as the canyon got deeper, it goes up to 250 million barrels of oil in place per oil and gas in place per square mile. I think AI is going to change it. Exxon came out 2 months ago and says they believe they can double the amount of reserves recovered per well, because you've got a guy that's sitting on a rig. He's controlling the command center inside that rig. He's tired. Had kids last night, went to the bar. He's making decisions on how to drill and the pressure and the drill bit and all the other stuff that goes with it, right? All of a sudden you apply AI, you're now taking a collective aggregation of skill sets, and that computer and that AI directive is going to help you drill the wells cheaper, better, more efficient, stay in better zone, fracking. I think AI could end up really accelerating the per well recovery rate, per well production rate. We get all the benefit of that for free. So I'm looking at data today saying we're super happy with what we see today. It's 5 times better than 5 years ago. But now we have drill bits going down that are using triangulation with satellites to tell that drill bit how to stay within 8 inches of the formation. 10 years ago, my brother drilled for the major. He said, look, man, we're getting down in that zone, that little sweet spot zone, but we're drilling in and out because by the time the cuttings get back to the surface, we have to correct the bit. Well, we may be 100 yards out, half a mile out before we get that data back to the surface, and we have time to correct for it. So what was really good 10 years ago became antiquated by 2015. By 2018, 2015 was antiquated. But now what you're seeing that as good as it is today, people like Exxon who are spending a ton of money on R&D are saying what you see today, it will pale in comparison to where we see the industry in 5 years. Why does that matter to minerals? If I buy mineral rights today based on the economics of today, and I believe that the technology, the extraction, the value, the number of wells drilled could easily 25, 50, 100% increase over the next 5 years because of artificial intelligence, improved technology and software and hardware, I get to pay today knowing it's going to be twice as good. If I'm getting 16% cash on cash today, I'll take 32% or higher. So I do think that what's going on in AI is going to significantly change the entire economic productivity of the oil and gas industry.
Wow, that's really exciting.
Yeah,
Troy, I want to thank you one more time for lending your time and your knowledge to us today. I took your contact information and put it back into the chat for everyone. For people who are watching the recording, can you actually, before I do that, let's get one more question. I currently buy land at a discount and sell or hold. Is there a way for you to determine the probability of minor would you be a likely buyer?
Yeah, I think he's saying if I buy raw land, is there any way I can send it to you? You do an evaluation, tell me if I have a snowball's chance there's oil and gas under it. The precious the answer is no. We've got 1,200 clients that own thousands of acres all over the country. It'd be something we'd have to set up. We have the software that tells every oil well in the United States. We have every oil well in our database. It'd be a lot easier for me to say, here's all the areas you should be buying raw land in. But most likely, if you buy raw land in an area that's saturated with oil and gas, it's already owned by a pretty sophisticated mineral rights owner, or it's being bought by guys like me. So one thing is, I'm telling you that most of these mineral owners had no clue what they own. It's just by pure luck that Grandpa Eckard bought in the right spot. And I think that's kind of critical that you realize that raw land is about what the future entitlement value is. Mineral rights are truly about what? It's truly about knowing how to specifically go buy minerals where you know the rigs are, the activity is. Alan, good to see you. I'll see you back up in Columbus here soon, my friend, as well. I just want you to know that every asset class is different, even in oil and gas. Pipelines are different from drilling. Drilling is different from minerals. Minerals are different from refining. So every sector has its division. If you happen to own minerals or you own raw land and you think you're in one of these basins, well, heck yeah, call us. But you might want to go look at the deed and title that you own or you bought. It probably has the mineral rights carved out or extracted or a separate deed and title.
Thank you for that. And thank you for the time. I put the contact information in the chat again. If you're watching the recording, just rewind back a little bit to get Troy's contact information. If you have any questions about what he discussed today and have need any more of his information, and if you have any questions about self-directed IRA, likewise do the same for my contact information. I appreciate everybody spending the time live with us today, and spending your time watching the recording later on. One more thanks to Troy and his team over at Eckard, and I hope everybody has a great rest of their day.
You guys have a great one. Stay cool. It's getting pretty hot in Texas. You guys take care.
Take care.